Hi, I'm John Gerspach, Chief Financial Officer of Citigroup. This morning, we reported our results for the first quarter of 2014. I'd like to take a few moments to go through them with you. Citi's profit for the quarter was, on an adjusted basis, $4.1 billion, or $1.30 per share. That's up 4% from last year as lower operating expenses and credit costs were partly offset by a small decline in revenues. I'll now go through our businesses one by one before updating you on a few of our priorities and closing with some remarks on the quarter overall. In our international consumer franchise, most key drivers were positive, with revenues up 3% year over year, average loans up 7%, and card purchase sales up 4%. Korea remained a headwind, but we believe revenues in this market have broadly stabilized as of the first quarter, and credit has remained favorable. In North America, our consumer revenues were down year over year, mostly owing to the slowdown in mortgage refinancing, but up from the prior quarter. Our strongest performer in this business was retail services, which grew 8% on the strength of the Best Buy portfolio acquisition. We also continued to grow our average deposits and retail loans, with each up 4% year over year. In our institutional businesses, revenues were down year over year, impacted by lower market activity, but up sharply from the fourth quarter of 2013. Some highlights include Treasury and Trade Solutions, which saw growth in deposit and trade finance volume, and our private bank, which enjoyed strong growth in investments and capital markets products. And lending revenues of an adjusted $415 million were up from prior periods, as higher loan balances and lower funding costs were partially offset by lower loan yields. Though down year over year, fixed income revenues were up sequentially by more than 60% on a rebound in spread products and local markets revenues, as well as an improved performance in commodities. Equities revenues of $883 million were up 13% from last year and more than 80% from the prior quarter, mostly reflecting improved performance in derivatives. Regarding our key execution priorities, during this quarter we further reduced Citi Holdings assets by $3 billion and cut its loss to $292 million. We also reached a $1.1 billion settlement to resolve certain private label securitization repurchase claims, putting another legacy issue behind us. And we reduced our deferred tax assets by $1.1 billion, or nearly half the total we achieved during all of last year. Finally, Citi's capital and liquidity positions remain strong, with an estimated Basel III Tier 1 common ratio of 10.4%, and our supplementary leverage ratio increasing to 5.6%, well above regulatory requirements. The Federal Reserve's objection to our 2014 capital plan and the discovery of a significant fraud in Mexico marred an otherwise solid quarter. Our CEO, Mike Corbett, has clearly committed that we will do whatever it takes to fix these issues. We've begun making the necessary changes, and we will work tirelessly to address any process or enhance any procedure that needs to be corrected. To get more in-depth information on today's earnings report, visit Citi's Investor Relations webpage linked below this video. Thank you once again for your interest in Citi, and I look forward to reviewing our second quarter results with you in July.